market movers. This is The Pulse with Francine Lacqua.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in for Francine today. The US president then threatening to block back pay for federal workers who've been furloughed during the government shutdown. It's the latest in a series of hardball tactics to put pressure on the Democrats, but they have described it as a baseless attempt to try and scare. The uncertainty, though, has pushed gold above $4,000 for the first time. The Bridgewater founder, Ray Dalio, says gold is now more of a safe haven than the US dollar.
Gold is a very excellent diversifier of the portfolio. So if you were to look at, just from the strategic asset allocation mix perspective, you would probably have something like, as the optimal mix, something like 15% of your portfolio in gold, because of the fact that if you didn't even have a tactical, because it is the one asset that does very well when the typical parts of your portfolio go down.
Let's bring in Bloomberg's Valerie Teitel right now for the market moves and that focus on gold. Is there anything stopping the yellow metal at this point, Val, with that move above $4,000?
Look, it doesn't feel like it. Look at the move today, up another 1.25% above that 4,000 level for the first time in history. And Tom, you just have to hand it to the fact that gold's phenomenal rally just seems unstoppable at the moment. It crossed 1,000 during the global financial crisis and the Fed easing that entailed. It crossed 2,000 during the COVID pandemic when the U.S. government started sending out stimulus checks, and it crossed 3,000 just back in April on the announcement of Trump tariffs. But if you look at how gold has acted this century, it really takes the cake from the equity market. It has rallied over 1,100% since the beginning of the century. You compare that to the NASDAQ. You compare that to the S&P 500. They've only risen by shy of 800%. So gold is really where you wanted to have been if you could go back to the 2000s and maybe adjust your portfolio. But again, this latest stage, this latest run up in gold, it's really interesting to see what the catalysts are behind it. Ray Dalio talking about this is just a further diversification away from U.S. assets into an alternative. But gold has really been rallying, whether the equity market is up or down, whether Bitcoin is up or down. In yesterday's session, it did notch another gain, even though the equity market slid for its first time in 7 days, breaking that second 7-day winning streak for the S&P 500. But as you mentioned here, we are dealing with that U.S. shutdown and the lack of government data. It seems like this momentum trades at the moment, like gold, are really unstoppable without that government data to really change the needle on the direction of the U.S. economy.
OK, Bloomberg's Valerie Teitel, thank you very much indeed. Meanwhile, in France, bonds rallying this morning as outgoing Prime Minister Sebastien Lecornu spoke ahead of more budget talks happening today. Emmanuel Macron's allies have also opened the door to suspending his contested pension reform. This as the French president strains to find an accord that would allow a new government to be formed. For more, let's bring in Henrietta Pacquemont, Senior Portfolio Manager at Allspring Global Investments. Henrietta, so we want to start, I know you've got views on the Fed and how to think about positioning in treasuries and in corporate debt as well, but we want to start on the question of France, given what has transpired in the last 30 minutes or so. Maybe it seems possibly some movement towards a resolution, though that has not yet been confirmed. What do you make of what we've heard? Is there a buying opportunity here for French debt if pension reforms are shelved and there is an agreement that brings the Socialists on board?
Well, Lecornu is negotiating. Right, he's going to spend his whole day negotiating with the various parties. So I think if you look at France at the moment, clearly the political picture is difficult, and that's because this is a country that is not used to having a split parliament, which is what it's got at the moment. So it's learning to deal with that situation, and it's learning to deal with that situation with a stonking deficit at the moment, which is what's spurring the discussions at the moment. So it'll be really interesting to see, how the day evolves. I think in what he said this morning, what's important is that he focused on the deficit and the efforts from a budget perspective, because that's what the market cares about at this point. So I think he's saying the right things. It's going to be a really interesting day. I think there's still a lot of options on the table in France, and I think that's why we're only seeing the sort of small moves that we're seeing on the bond market and on the equity markets in France today.
Yeah, they're relatively modest moves. They were slightly more pronounced earlier, and they've paired some of the gains that we've seen, but the gains are still there, to your point. And you zone in on the deficit. So Lecornu, the Prime Minister, outgoing Prime Minister, saying the deficit target for 2026 should be below 5% of GDP. And you're making the point, Henrietta, then, that is the focus of the markets. And if they come to some agreement on a deficit target around that level, that would offset concerns about scrapping a pension reform that in itself will add to costs.
Well, it's the whole package, right? You want to see the French government and the political establishment making a dent in the deficit. If they give way on the pensions reform, it makes that exercise a lot harder because that's going to be costly. So yes, the market is going to look at that. I think it's also politically difficult, obviously, for Macron on the pension side as well.
OK, and we'll move on from France, but one last one, Henry. Are you buying French debt at this point?
So we do have some exposure to French debt at this point. We're not going too long along the curve. We're focusing on the sort of intermediate path because the yields are pretty attractive at this point. And if you look at the spread against Germany, we're between 80 and 85 at the moment. That's not bad.
The belly of the curve is where you should be focusing when it comes to treasuries. Is that what I should take for you as we switch focus to the US and we start to try and understand where the Fed goes, given the lack of data? Where are the opportunities in US treasuries?
Again, that's an area of the curve that we quite like, right? Because it avoids some of the volatility that we've seen on the longer end. And we've seen some of the start of the cuts on the short end of the curve. If you look at the belly, you benefit from the cuts. And also, some of the normalization of the curve. So that's an area we quite like. I mean, obviously, the US is still a complicated story. They too have a deficit that they need to deal with. If you look at the policy at the moment, it's not clear how much of a dent that's going to make on those numbers there as well. And obviously, as you mentioned, the complication in the US is at quite a sensitive time, we're lacking data because of the shutdown. So that does make the sort of views a bit harder on the US side there.
And given that lack of data, what does that do to your projections around the Fed then, Henrietta? So markets pricing at about 100 basis points between now and September of next year. Does that seem reasonable to you?
So I think the sort of next cut is probably baked in at this point, given the lack of data. Then I think we'll have to see how things evolve. We are in a situation in the US where inflation is still sticky. And we really need to get a bit more information in terms of where the labor market is headed. It does, from the latest data we've seen, looked a little more fragile there. So we need to see if that's confirmed with further data or not, as the case may be.
The importance of sector and global diversification in this environment, Henrietta, just expand on that for us.
I think if you look around, there's a lot being thrown at the market at this point in time. But we are in a situation where there's a fair amount of yield on offer. And that is, I think, what we're liking looking at the market at the moment. And it's not all in one place. You can build a diversified portfolio looking at different geographies and having a nice impact and a nice yield in the portfolio. So that's really what we're trying to do. And the diversification helps as we have these sort of uncertainties strengthen in certain areas more than others over the time.
Yeah, where do gilts sit in that then, Henrietta? Do you buy UK sovereign in the lead up to the budget, or do you need that as a clearing event?
I think we have some. We'll see what the budget gives, and what we want to do with that position. I mean, obviously, if you look around, it's one of the higher yielding environments that we have at the moment, courtesy of inflation, courtesy of the focus on the budget. That being said, yes, they've got a deficit, but it's not as bad as other areas in the globe. So I think that justifies a position there.
When it comes to corporate credit, how far along the risk spectrum do you want to go? How comfortable are you pushing into high yield credit in this environment? So
credit markets have been incredibly benign, actually, over the last few months. They've been following their cue from the equity markets. We've got tight spreads. Particularly when you start looking, since even the great financial crisis, they're looking pretty tight at this point. I think what investors are interested in at the moment is less the spread angle at this point and more the overall yield. And again, if you look at the credit markets, it's providing that yield to investors. That being said, at this point, given where spread levels are, we are being a bit picky about where we want to be. And we're not sort of dipping our toes too deep in terms of the credit spectrum there. There's plenty to do in the upper echelons of credit ratings.
OK, Henrietta Pacmont, thank you very much indeed on the importance too of diversification, of course, and going across different sectors when it comes to the credit space and the sovereign space as well. Allspring Global Investments Senior Portfolio Manager, thank you for those insights in terms of how to position as we think about, of course, the travails over in France politically. We lead up to the November budget here in the UK and expectations around a Fed that is still on course, at least that is the view of many, for further rate cuts. Let's get to what's happening in AI, though. Of course, this is another catalyst, at least for the equity markets. We're also seeing some debt being raised as well, because Bloomberg has learned that Elon Musk's xAI startup is raising more financing than initially planned, including an equity investment from, you guessed it, Nvidia. Sources say its ongoing funding round has now reached $20 billion. Let's bring in Bloomberg's EMEA tech reporter, Mark Bergen. Mark, what do we know about this deal then? It's really fascinating. I mean, as you mentioned, Nvidia's in this one. It's sort of like if you're an AI company and you're not raising from Nvidia, who are you at the moment? Like as we reported earlier, they pledged to spend $100 billion on OpenAI over the next coming years. What's interesting about this deal that Elon is constructing is it's largely, from our reporting, debt. And that debt's being used to purchase GPUs that Musk and xAI will be planning to rent out over the next 5 years. So a very unusual structure, but one we might see replicated elsewhere. OK, so we'll watch to see, as you say, if that is a template that is used elsewhere, either by Nvidia or others. Look, you're speaking to sources all the time in the ecosystem. When you're thinking about the investments between Nvidia and OpenAI and xAI and Nvidia, and it keeps going on with Oracle, are you hearing concerns about the circular nature of these financing agreements? How real is that concern? Or is this simply an arms race where capital has to be committed? Yeah, I mean, the big take today on Bloomberg is all about these circular investments. I mean, I think we've heard this from a lot of venture capitalists, I think, that are like being edged out by these deals, or these deals are increasing because someone like Nvidia and OpenAI and AMD can come in with a lot more equity and a lot more money. And effectively, like Nvidia is giving a chunk of change to a company that's going to go back and buy their GPUs. So there are concerns. There have been regulatory issues. Right now, this week is a really great case study for the fact that these concerns aren't slowing anyone down. Yeah. We're getting reminders of that, seemingly on a daily basis. When it comes to the margin story and Oracle, is there a concern from some of the reporting that maybe Oracle is having to absorb quite a lot of cost, and therefore they don't have the margins that maybe someone expected? Yeah, yesterday there was an interesting story out of The Information that seemed to have immediate impact on Oracle shares, that for their AI cloud, the margin was, I believe, 14%, which is incredibly low, especially for a software business that is typically up in the 70%. 14. Yeah, that's right. And so these are costly enterprises. Microsoft their CFO has talked about the decrease of margin pressure on Azure as they're getting more into the AI cloud. They have to rent these newer Nvidia GPUs that are coming out. They have to build these costly data centers. I think this speaks to these broader concern that we're having, that word bubble,
that this industry is incredibly cost intensive and we haven't seen profits yet. This is all being invested on this promise of future profits that hasn't quite delivered. And this was maybe a canary in the coal mine about the profits that are coming aren't going to be as big as the prior internet boom. OK, is Oracle the canary in the coal mine? Mark Bergen, thank you very much indeed for the latest in terms of the funding round for xAI and some of the margin concern around Oracle. Meanwhile, shares in ASML are lower this morning. This after the House of Representatives panel on China accused the company and others of fueling chip manufacturing in China. US lawmakers say firms including ASML and Applied Materials made sizable returns selling equipment to Chinese state-owned and military-linked companies. ASML, of course, the Dutch company that makes those extreme ultraviolet lithography machines essential to production of higher-end semiconductors. Coming up, we're going to discuss the impact of Trump's funding cuts on philanthropy with the head of Goldman Sachs' charitable arm. That is next. This is Bloomberg. Welcome back. Now, the head of Goldman Sachs' charitable arm has warned of the challenges the philanthropic world is facing from President Trump's efforts to curb programs that don't align with his policies. The Trump administration has gutted America's foreign aid agency, slashed funding for climate projects and targeted diversity initiatives. We're joined now by Asahi Pompey, global head of the Office of Corporate Engagement at Goldman Sachs. She's leading an initiative to give junior employees the chance to take a lead role in corporate giving and pitch their charity of choice to senior executives. Asahi, thank you for joining us around the studio this morning. Let's start with that initiative then and what it tells us about the importance of initiatives like that to retaining talent. What are the links between those kind of initiatives and retaining some of your quality talent at Goldman?
Absolutely. So here's what's happening. We have a competition called the Goldman Sachs Analyst Impact Fund. 1,000 analysts from over 60 countries compete head-to-head to raise money for a charity that they selected. And they compete in front of the CEO of Goldman Sachs and the senior leadership of the firm. Why are we doing this? It's around making sure that our most junior talent have a stake in the philanthropic giving of the firm. We identify incredible talent. And we also know that Gen Z says, look, having a sense of purpose at work is incredibly important to me. It helps to retain them. And we've seen that with the Analyst Impact Fund over time. So today, we will go from 1,000 to 4 teams and then 1 winner. OK, so they get whittled down. But there is a link between these initiatives and retention there. And at the time, of course, for competition around talent is still there. And we talked about the fact that philanthropy, the spending, particularly in terms of foreign aid out of the US, that foreign aid gap is clearly there now with the cuts. So corporate philanthropy, to what extent can corporate philanthropy fill that gap? How big is that gap and what can corporates do to fill it? So corporate philanthropy can't fill the gap, but I divide it into a couple of things. One is private giving overall, right? So we've seen private giving increase almost 7% year over year, so $600 billion. Corporate giving is also up. About 9%. That's the biggest jump in about a decade. Is it going to fill the gap entirely? No. We anticipate that the gap will probably be in the billions when you account sort of the chill and trickle down impact of it. But here's what I would say, Tom. Look, nonprofit heads are no strangers to volatility, right? The arc of history is long. They've dealt with tough times before. And so they're doing a number of things. They're looking at their organization and figuring out where they need to better target their resources to make sure that they're still having the impact that they need on the individuals that they serve. In addition, they're looking to take a partnership approach. They're looking to see whether they can team up with other organizations. AI, they're looking to see if they can get leverage, scale, efficiency with AI. So, yes, are they concerned? Incredibly. But they're fierce in terms of wanting to make sure that they're delivering for their constituents.
As you bring up AI, I'm thinking of junior bankers and analysts who are going to be pitching as part of this initiative. What is the future of those roles in a world where agentic AI is being rolled out? I know across the teams at Goldman. How do you think about that?
Look, I think, we're in a people business. That's not going to change. And so it's a matter of making those people more efficient, more effective, giving them more tools to be able to deliver even greater impact for our clients. I mean, I'll take you through one example of a nonprofit.
Yeah.
We are seeing 30% of nonprofits say that in the last 12 months, they've been able to increase their revenue through using AI. How are they doing it? They're doing it through really looking at that donor data to be able to identify gaps, identify retention issues, and be able to use that to get more funding. So across the board, people are leveraging it.
So you don't think junior bankers should be too worried, or analysts should be too worried about agentic AI? I mean, is the pyramid shape of the workforce, is that dated now? And if so, what shape are we looking at?
Look, you don't want to end up in a scenario where our younger talent, who is the most facile on technology, are the people that you're having least in the organization. I'll share a stat with you.
Yeah.
50% of our people are in their 20s, right? And so I anticipate that that's going to continue over time. So, Tom, I think it's about giving them the tools they need, not necessarily having fewer of them over time.
50% of your workforce in their 20s. You're making me feel very, very old indeed. Before we let you go, look, on the rollback of DEI initiatives and ESG initiatives in the US, and it's been pronounced and it's been a central part of the platform for the Trump administration. Does it make your kind of initiatives more difficult?
We're very much focused on small businesses, our 10,000 small businesses program, our 10,000 women program. We have a program for solopreneurs as well. That cuts across every single group. Rural America, here in the UK, we have almost 3,000 business owners that have graduated from that course. So that is something that we know is an engine of growth. So that doesn't really impact those particular programs.
Okay, Asahi, thank you very much indeed. Asahi Pompey, Goldman Sachs, Office of Corporate Engagement Global Head. Thank you for your time and insights on this topic. Now, switching focus to the Governor of the Bank of Spain, currently taking part in a fireside chat with opening trade anchor Kriti Gupta at Bloomberg's Future of Finance event in Madrid. Let's listen in.
Forecasts are very much balanced. On the upside come from fiscal policies, comes from something that we have not seen yet, but it might materialize maybe with some lags, which is the fact that the new geopolitical tariffs and trade framework coming from the US might give rise to a sort of disruptions in supply chain. We sometimes focus too much on tariffs, but when you examine the agreements, there are a number of non-tariff provisions that, if they were to materialize in the future, might distort trade, and this might result in a sort of loss of efficiency at the global level. This is potentially inflationary. I mean, this is another factor we need to take into account. By contrast, there are also factors that might be tilted to the downside. Diversion of trade from China to Europe, being China an economy with very low prices, might, let's say, exert some down pressure on prices in Europe.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. Gold smashing through the $4,000 barrier for the first time as uncertainty over the US government shutdown drives investors towards havens. Bloomberg learns that Nvidia is one of the investors in xAI's $20 billion funding round, contributing $2 billion to help Elon Musk's AI startup buy Nvidia processors. Plus, outgoing French Prime Minister Sebastien Lecornu expresses optimism on reaching an agreement to allow the formation of a new government. More on that story now. French bonds are rallying, outperforming peers ahead of crisis talks aimed to restore political stability in France. Jean Dalbar from Bloomberg Economics joins us now for the latest. So, Jean, we've been hearing some, at least modest optimism from the outgoing Prime Minister. Does it seem like we are potentially getting closer to a deal?
So at least we see some light at the end of the tunnel. But I wouldn't be too optimistic about it because the Prime Minister has been speaking with its current coalition. So it's not a big news. It's not a breaking news that they have been able to convene around like a new budget for next year. The more important thing would be the talks with the Socialist Party, the center left, which is going to happen today. And that could be more important in the perspective of potential new elections or in the perspective of having a new government to pass a budget for 2026.
And central to that, it seems, Jean, is a discussion about these pension reforms that really were flagship for Macron and his team. And yet we're getting suggestions that maybe these pension reforms are on the table.
Absolutely. It will be crucial for the Socialist Party to obtain something in a potential future government, and a suspension of the pension reform would be key to get them on board. We have calculated that it is something pretty risky in long terms for the debt sustainability, because reversing the pension reform would lead to an increase in debt to GDP ratio by 15 basis points over 2050. So that's something tricky on the long term. But I guess on the short term, it's also positive to get a budget passed, and it's a trade-off between short and medium term. And we could see a world where the government will reverse the pension reform and wait for the next presidential election in 2027 to get something done on the pension system.
OK, Jean Dunbar from Bloomberg Economics with the updates there out of France and what it could mean, of course, for the deficit and the bond markets of France as we await more information, possibly as soon as today. Jean, thank you. Meanwhile, here in the UK, well, in India, in fact, UK Prime Minister Keir Starmer is leading a delegation of more than 100 British business, academic and cultural leaders to India. Just hours before Starmer's arrival, Indian Prime Minister Narendra Modi tweeted a warm birthday message to the Russian President, Vladimir Putin, underscoring the difficult balance that Starmer must strike in that relationship, of course, with India. Joining us now is Shamita Deveshwar, who is the chief India economist at TS Lombard. Shamita, thank you for your time. We won't delve too deeply maybe on geopolitics because of, of course, your specialism in terms of economics. There is clearly that tension that Starmer has to manage with his counterpart in India. When it comes to the trade deal that has been secured by these two powers, where are we in terms of implementation? What additional detail could we get on this visit?
I think that it's very encouraging that just 3 months after the trade deal was signed, the British Prime Minister is here to hold bilateral talks. Now, of course, this is in the backdrop of a lot of trade headwinds for India because of pressure from the US. We now face the highest tariffs in the world of 50%, along with Brazil, I suppose. And a lot of that is because of the penalty on Russian oil, half of that. I mean, 25% penalty because we are importing cheap Russian oil. I think that for India, this is a delicate balance to tread, because at the end of the day, we are importing about 80% of our energy needs. So we need inexpensive oil. But of course, we are facing the repercussions of that, from pressure from our largest trading partner, which is the US. So in that scenario, it's encouraging that at least the British trade deal seems to be going through, and they're working on implementing it.
Yeah, so the implementation continues and that progress on it, and maybe with the pressure in terms of that relationship with India and the US a factor as well, possibly in accelerating it. What do you expect, Shamita, what do you expect to come out of this meeting ultimately that could be material?
From India's point of view, it represents confidence that people are willing to engage with India, and India is working on various trade deals with the EU, with West Asia. So I think that there is this is a bit of a confidence boost, because there's been so much attention on India thanks to US action, and I think that there are various ways in which India can try and offset at least some of the impact of US trade. It also shows to an extent that India is so dependent on certain countries, right? We're so dependent on Russia for our energy imports, and we are so dependent on the US for our exports for both goods and services. So I think it's time for India also to think about diversifying their markets. both for imports and exports.
Yeah. Well, in that context then, and given the pressure from the Trump administration, is there also an effort underway to accelerate the reform agenda for India?
So we have seen one of the big reform measures that came through just a few days ago, a couple of weeks ago, was the rationalization of GST rates in India, making a spate of goods and services cheaper. And this is really seen as a way to offset the external headwinds that we are facing by trying to resuscitate domestic demand, especially in urban areas that has been lagging. The key point for sustainable growth, though, is a greater investment. And for that reason, and we need foreign investment as well to come in. So for that reason, again, this visit by the British Premier is important to signal that India is open for business, and we are welcoming foreign investors here.
What is your current outlook for the Indian economy in terms of the growth picture for 2026?
So India, continues to grow at what is the world's fastest growth rate, and all the predictions are showing that we're going to be around 6.5% or a little higher. And even next year we should grow at around 6% or so. So that makes India a strong economy compared to most of the countries around the world. The problem is that it's just not fast enough to create the kind of employment to create to generate enough investment in the economy. And even this, the consumption side of the piece, which the government is working on to boost consumption to offset the growth headwinds, that is not going to sustain unless we have greater investments. We're creating more jobs. So 6% growth is good compared to what's happening in the rest of the world, but it's not good enough from India's point of view to create sustainable growth and employment.
Shamita Devashwa, Chief India Economist at TS Lombard, thank you very much indeed with that projection around growth for India, but also what is needed to get more jobs, of course, created in that country at a time when the UK Prime Minister is in India with a significant trade delegation on conversations about how to implement that UK-India trade deal. So it's a story we'll keep across for you, of course. There's a redhead that's crossed the terminal right now, and this comes from our own Kriti Gupta, who is in conversation with the head, of course, of the Central Bank of Spain, Escrivá, saying he cannot preempt the direction of any next ECB move. That is the line coming through. That's the redhead right now. Escrivá saying he can't preempt the direction of any next ECB move. Rates, of course, ECB rates are currently at 2%, and inflation is in line, pretty much in line with the targeted 2% from the ECB. Escrivá saying inflation expectations are very much anchored, cannot preempt the direction of any next ECB move. We are not preempting anything on rates, he says. The ECB needs to be cautious, and the outlook remains uncertain looking forward. So we keep across that for you right now. Check in on the euro on the back of that conversation. The euro is down 0.3% at 116. The line's coming through, of course, from the central bank governor of Spain. Now, to the UK, where borrowing costs or at least borrowing in the first 5 months of the financial year was £2 billion lower than previously thought. That's after the tax office found an error in its VAT receipt data. The mistake lowers borrowing between April and August to just under £82 billion. That still leaves Chancellor Rachel Reeves overshooting the Office for Budget Responsibility's forecast by £9.4 billion. JP Morgan CEO Jamie Dimon has told me he would welcome proposed changes to ease US Securities and Exchange Commission requirements for quarterly earnings reports. Here's part of my exclusive conversation with the CEO and chair of JP Morgan.
I think the bigger problem wasn't just reporting quarterly. It was forecasting where, CEOs get their back up against the wall. They have to meet these things, earnings, and they start doing dumb stuff to meet earnings and that kind of public pressure. I think it's a smaller part of a much bigger problem. We've gone from 8,000 public companies in 1996 to like 4,000 today. And, you know, that, I'm not sure that's good. We drive companies out of it. We have cookie cutter governance. Some activists are good, but they're activists. There's litigation. There's cookie cutter compensation. There's very expensive listing. There's, you know, disclosure rules, which you've heard about them here. I mean, endless rules, and that it makes it hard for a small company to go public. So I think, and they're trying to do that here, have an active small company going public. That's what we all need, and create an equity culture, which Rachel Reeves was trying to do here. And I think they're doing a good job reducing regulations, you know, trying to make it easier to do business, and, you know, reducing regulation in banks, but also in business in general. You want an active market, and we've kind of crushed it. And because the research laws and MiFID and disclosure requirements. So if I was a regulator, I would take a step back and look at the whole system and say, how can we improve it and make it safer? You know, and look at it holistically as opposed to, you know, just everything's like a one-off conversation.
I need to talk to you about some other changes that the Trump administration has taken. You are a champion of capitalism and free market capitalism.
Yeah.
So when you see stakes taken by the administration, or the US government, let's put it that way, in terms of Intel, golden share for US steel, investments in a lithium mine producer, how does that sit with you?
Yeah. So the first thing is there are legitimate complaints around trade. So just take that first. Some are around just unfair trade. It's unfair to use, you know, it's not just tariffs, it's surpluses, it's capital, it's quotas, it's just, you know, it's the non-tariff barriers. And then there's national security related. So I think in national security, you have to take some special thing. I call it industrial policy, but it's got to be done right. It's got to come with permitting, no virtual signaling. And so like the deal that was done for MP, I thought they did a very smart thing. They're giving MP, which we were part of banking, you know, does rare earth magnets, because they're going to have a long-term contract with the government, it gives them a chance to survive, to get through it. They call it the valley of death. And they bought a piece they're going to do that. So I thought that was really well done. I'm not going to comment all of them. I think you have to be very careful when you get involved in that kind of stuff. Why are you doing it? What's the long-term benefit? You know, and then of course, you know, if Democrats get in power, they're going to do even more of it. So I would be very cautious about how you go about that. I do think they need to do more. You cannot do certain things in the United States. You think a company's going to do it, they'll be bankrupt in 7 months. They either need free land, cheaper financing, and maybe the most important thing is long-term purchase agreements with, you know, defense or companies or something that gives them a real chance to build a business.
You touched on the fact, look, we're here in the UK. The Chancellor's here. She addressed the summit. She addressed the conference. She's making those changes. Is the UK doing enough? There are going to be potentially some changes when it comes to listings. They may be announced in their budget in November. Is enough being done to make the UK, to make London an attractive listing destination again?
Well, first of all, something here, it's a wonderful city. It's a melting pot. The brain power is extraordinary. And I'm talking about not just financial, but lawyers and technology, media. It's unbelievable. It's a huge benefit to UK, though I'm not sure the rest of the UK appreciates that much. And they're saying the right things. They're deregulating. It's not just banks, but business in general, reducing red tape. I call it blue tape now. You know, they're reducing red tape, blue tape. They're trying to consolidate the pension and savings schemes, which I think is very smart. Have a little more of an equity risk culture. You know, not to lose money, but to take a little more risk. And maybe some of these tech companies here. Yeah, I applaud everything they're doing.
OK, JP Morgan CEO, of course, Jamie Dimon, speaking exclusively to me yesterday. Coming up, Verisure jumps on its stock market debut, talking of IPOs, becoming Stockholm's biggest listing since 2000. That story is next. This is Bloomberg.
Ray, when you were building everything, what motivated you? Was it knowledge or money?
It was really the game. I love the fact that I could be tested in the real world because I'm having these interactions. And I love the fact that I'm scored every day. I could score how I'm doing to 3 decimal places, you know?
Showtime. Ray Dalio built one of the world's biggest hedge funds. Now he's exploring the deep. How often are you on the boat, Ray?
Well, often, let's say I'm probably on the boat 6 times a year, but I spend maybe a couple of weeks.
And it's all over the place, right? All over the world.
All over the place.
We met him on board his research vessel in the port of Nice, where the United Nations Oceans Conference was in full swing. At events like these, world leaders, NGOs, big business, and stakeholders gather to raise awareness and address the urgent needs of our waters.
So is President Lula coming?
It's on and off, and it's on and off, but he is supposed to come with President Macron, but these things come and go.
They're held up. I know what it's like. How long did it take to build the ship?
About 3 years from the architecture to building it through.
No. Is there one thing that you're trying to?
No one thing. There's lots of things.
Just trying
We
to
want to see it all.
understand it.
This is twice the size of all Earth combined, right? Of all land, and it's never been explored.
But why? Are you frustrated? I mean, you seem
No,
like...
I'm excited.
Okay.
I'm excited.
Well, a sneak peek there of Francine's conversation with the Bridgewater founder, of course, Ray Dalio. And you can see more in the next episode of Leaders with Francine Lacqua, which airs at 5:30 p.m. London time on Friday. Now to a significant IPO in Europe, Verisure jumping in its trading debut in Stockholm. You can see the stock is up almost 20%. Its IPO raised about 3.2 billion euros. Yes, euros, making it Stockholm's biggest listing in 25 years. It's also the largest European debut in 3 years. The chief executive told Bloomberg the listing is about long-term performance rather than a first-day surge.
I think it comes down to the quality of the asset and the length of the track record. I mean, we've partnered together, for more than 11 years. I mean, over that decade, we've actually tripled the size of the portfolio. We've quadrupled the revenues. We've quintupled the profitability. So it's not a short-term story.
Yep. Well, let's bring in Bloomberg's Stockholm bureau chief then, Charles Daly, who was at the NASDAQ as Verisure began trading. So, Charles, the biggest Stockholm debut in 25 years.
Yep, that's right, Tom. It's a very big deal for the company, but also for Stockholm as a listing venue. As you said, I was at the event earlier this morning. They'd actually built a purpose-built stage because there was that many attendees at the listing bell ringing, which has never happened before for an IPO at NASDAQ. And I think that also reflects, again, what a big deal this is for the company and the country.
Is this a long-term growth story? What are the metrics we're looking at? How sustainable is the growth picture for Verisure going forward?
Yeah, I mean, the management team and the private equity owners certainly think it is a long-term growth story. And that is reflected in the fact that they're both holding onto their shares today and not selling. The company has been growing customer numbers at a fast rate, over 5 million now. And one of the CEO's favourite statistics that he likes to use is that only 4 out of every 100 households currently use monitored alarm systems. So to him, that represents a huge market opportunity both in Europe and Latin America.
And Charles, I mentioned in the introduction that they raised in euros and not in krona. What was the rationale behind that? Why do the listing in euros?
Well, I think there's a couple of points there. One, the appeal of euro is obviously to a wider investment community. Many euro funds wouldn't be able to invest in non-euro priced assets, so therefore that becomes a deeper capital pool. And I think another important point is it also speaks to Stockholm's credentials as a listing venue that can compete with the likes of, say, Amsterdam or even London.
Okay. Bloomberg's Stockholm bureau chief, Charles Daly, thank you very much indeed. The stock popping almost 20%, so the biggest listing there in Stockholm for about 25 years. And Charles was on the ground for us. Charles, thank you for that update. Verisure listed today. Meanwhile, to the auto space, and a very different story. BMW, the biggest faller in Europe this morning after the car maker cut its financial guidance for the year. It cited persistently weak sales and tariff-related costs. Joining me now is Bloomberg's Stefan Nicola from our autos team in Berlin. Stefan, talk to us about the impact that China is having. I mean, BMW seems to be really losing ground in terms of sales in China, and for now at least, it seems like that story is not yet coming to an end. What is going on in terms of the Chinese market and the slowing demand there?
Yeah, thank you. I think it's two things in China. One, luxury demand there is persistently slow, and of course BMW's cars are priced in the premium and luxury segment. And then the other part of the story is that on electric cars, the local brands, BYD, Xiaomi, Xiaopeng, all of these car makers are really dominating on battery-powered cars, and the Germans have sort of slept through the trend a bit here and are just now coming to the market with their electric offerings. But right now the Chinese are dominating on EVs, and so it's hurting them on two fronts.
Okay, so it's the EV's domination out of China, but also the slowing demand for the high end that you point to in China that's having an impact, as well as the tariff impact as well that BMW flagged. Meanwhile, switching manufacturers then, Stefan, to focus on Tesla, introducing versions, talking of EVs, of its top-selling models, but with a lower price tag. How is the market receiving this? Is there demand for a lower price, but kind of strip back Tesla?
Yeah, there was a lot of excitement before that unveiling, and the shares have reacted negatively, and that's reflective because this is basically, a low version of a model that's been around, or models that have been around since before the pandemic. So these cheaper Model Y and Model 3s are, a tad disappointing, given that Tesla has been the trailblazer on EVs, and now we've been waiting for a new affordable EV from Tesla, and those deliveries haven't really come.
Yeah, it's like the market is saying, is this the best you can do on that story? Bloomberg's Stefan Nicola in Berlin on the challenges facing BMW and the lower-priced Teslas being announced as well. Stefan, thank you for that update. Meanwhile, here in the UK, the Financial Conduct Authority says it now expects some of the country's biggest auto lenders will spend £8.2 billion to compensate customers who were missold car loans, including the cost of getting the refund programme up and running. The FCA says the total cost is likely to be £11 billion, lower than the midpoint previously provided. The agency now expects average compensation of around £700 per consumer. Here's what else to think about today then. 11 a.m. UK time, Kemi Badenoch will speak at the Conservative Party annual conference. Meanwhile, the Prime Minister, Keir Starmer's first official visit to India continues. This, of course, on the back of that UK-India trade deal. We know the focus is on implementation and, at least from the UK Prime Minister's perspective, trying to open up further access for UK businesses. He goes with a delegation of a little over 100, including business leaders, of course, as well. That's his first official visit to India in his role as Prime Minister. Then at 7 p.m. UK time, we get the Fed minutes, so a little bit more detail in terms of the most recent Fed decision, of course, that interest rate cut of 25 basis points, and what that could do in terms of informing our views as markets price in about another 100 basis points of cuts between now and September of next year. And later, it's decision time for President Macron and the government, as some progress has seemingly been made. Let's check in on the markets before we let you go. And we're looking at a picture of gains across the benchmark, up 0.5% here in Europe. US futures also pointing higher. The S&P E-minis, after closing lower by about 0.4 yesterday, pointing higher by 0.1%. Up next, it is Bloomberg Brief. This is Bloomberg.